Place your bets, ladies and gentlemen.
Well, I will tell you this, Leslie, if you do win the lottery, your credit score no longer matters. But having a good credit score could save you thousands of dollars, of course, over the course of your lifetime. Now, if you're a non-winner like me, well, you know your credit score could improve things. So do you know yours? How and when to obtain it? And what affects your credit score? Well, tonight on Money Talks, we dive into the FICO score and what you need to know. Your FICO credit score. First of all, what does FICO stand for? Well, glad you asked. It's the Fair Isaac Corporation that lenders use to determine whether or not you can and will pay them back. I'll let certified financial planner Neil Vinoy describe in greater detail.
There are three major credit bureaus, Equifax, Experian, and TransUnion, that collect information about your credit history and compile it into a report. That information is used to calculate your FICO score or your credit score, which is a quick estimation of your credit worthiness. Having a good credit score is important because not only will it affect the interest rate you get on a loan, but employers, insurance companies, and other companies can look at your credit score as well.
There are four major factors that affect your score that will land somewhere between 300 and 800.
Paying your bills on time is the most important factor that affects your credit score, and it'll impact about 35% of your credit score.
Neil says that you also want to keep those balances small.
You want to avoid maxing out your credit cards because the percentage of available credit that you're using is known as your utilization ratio. So keeping that ratio down to 10% or lower if possible will help you get the best credit score.
The other two aren't weighted as strongly for your score, but they still do matter.
An older credit file will have a more stable credit score, so avoid closing out those old accounts even if you're not using them anymore. Frequently applying for new credit can affect your credit score negatively for up to 12 months, so avoid applying for new credit unless you really need it.
So just to review, pay those bills on time. Don't max out your credit cards. Older accounts should not be closed as you want to show a long pattern of credit worthiness, and keep those hard inquiries to a minimum. And if you want to know what your scores are, as they will be different with all three bureaus, you can get a free look once a year at annualcreditreport.com. Now, just a couple of more points to make. The laws have been changed when looking for a mortgage or a car loan. You now have 30 days to shop for the best loan by contacting as many lenders as you want, and it will only look like one hard inquiry over those 30 days to your credit. And the average credit score in America, according to Vantage Score, is 698, which falls in the good category.